Welcome back to Halftime Report and talking about the crude and the metal prices right now. It actually is trading in different directions. If you look at the crude oil prices, we're trading nearly 3% in the positive, and this is ahead of the OPEC and allies meeting. But on the other side, the metal strength clearly has not been able to hold on. Crude on your screen, by the way, now inching 3.25% on the higher side. So this is one place that clearly seems to be rallying. Joining us now is Kunal Shah of Nirmal Commodities. Kunal, highs to the crude oil prices first, because we opened 2.5% on the higher side and now we are nearly 3.5% higher.
Yeah, we won't like it, but the fact is that oil prices are now going to go up. So unfortunately, at the time when there is so much turmoil taking place, there are concerns about inflation. OPEC plus led by Russia is clearly indicating another 1 million barrels of production cut. They started last month with a 1 lakh barrels of production cut. Now they are talking about a 1 million barrel production cut. This will lead to a major deficit in oil market. Right now, oil market is in a deficit of 0.6 million barrels per day. That deficit will expand to 1.6 million barrels per day with this kind of production cut, and it will not end. So if oil prices goes down further, they are going to do more production cuts. And I think this is mostly going to come from Russia. So it seems that the energies are basically used as a weapon right now. And even in this kind of times, in this so much uncertainty across the world, now the shock to all of us is going to come, where oil prices are going to at least go up by another $8 to $10 in a matter of 1.5 to 2 months. So not a good news for oil bears. I think oil prices are going to go up and we are going to see a sharp rebound.
All right. So when you say $8 to $10 of a jump up in crude prices in next 2 months, clearly is not good news there. But the point being that 1 million barrels of an output cut is what the markets are thinking about or factoring in right now. If we see something lesser than that, would you say that there could be some profit taking on those levels?
Yeah. So the narrative here, what I said is OPEC is going to cut the production by 1 million barrels. That's the main narrative. So if the narrative changes, if they do not cut 1 million barrels, then obviously you are going to see another decline coming in. But it seems, that OPEC is not happy when oil prices will go below $80. They are not going to like it. They have tested the blood. They have seen oil prices sustaining about $110, $115 for 2 quarters at the start of the year. They won't like $80. And Russia, obviously, right now seems to be in a more dominant position. If Russia, for example, OPEC doesn't agree to cut the production anyway, from 5th of December, European oil embargo is set to take place. So to add the fuel in this war, Russia will deliberately say, okay, look, Saudi Arabia is not going to cut the production. Qatar is not going to cut the production. Iran is not going to cut the production. But I will cut the production by 1 million barrels. Because anyway, Europe is not going to buy oil from us from the 5th of December. So I'm expecting this kind of move from Russia. And this will lead to further upside in oil prices. Not a good news.
All right. No, you don't give us good news on crude, clearly. But talk to us about the metal prices. Is there some support coming in there? Because the month of September, the quarter that has gone by, was not positive for many of these metal prices. But now, because of capacity concerns in Europe, also China is opening up, and we've seen a couple of better economic data come in from there. Have you turned a buyer in some of these metals?
This week, China is not, there is a holiday in China, so we are not going to see any major move. But what I'm expecting is the way dollar index have weakened from 115 to 112, some macro-related buying. So because weaker dollars, higher commodity prices, that equation is going to come into play. And we are going to see a bounce in most of these metals. Copper in particular can bounce till 652, 651. Same way, zinc can bounce till 275. But I'm not bullish. The fact is, my narrative is here that metal prices are not going to move up because of the demand concerns, not because of the supply issues. So the global economic growth is going down. So even though China has come up with a stimulus package, but it's not that meaningful right now, considering the state of economy over there. So we can see a bounce in metal prices, but I continue to remain bearish on all of them. And if I was to advise somebody, I would sell the rallies rather than doing this bargain hunting.
All right. So for the current quarter then, until the time we see end of this year, what's your sense on the metal prices? I mean, you've already told us that copper is the most bullish on your screen, relatively on what the narrative that you're working with. What kind of a decline? What is the range that you will work with most of these?
Okay, I'm expecting by the end of December, copper on LME will again go below $7,000, 6,800, 6,850. And from there, you can see some meaningful recovery. Aluminum already down. I'm not expecting a major downfall. Another $100 from here. It doesn't have a room from here to go down much. But I think the demand concern will dominate this complex rather than the supply side issue or the lower inventory in the LME warehouse. So I'm expecting another 4 to 5% decline in most of these metals.
Okay, Kunal, Manisha, thanks very much for joining in, taking us through the entire metals basket and what it's doing today. Well, with that, it's also a wrap on Halftime Report Business Lunch just after a short break. Stay tuned.